Hey everybody, my name is JJ. You're watching Bull, Boom, Bear, Bust. We're back with another dose of economic reality. Car prices may be ready to start going back higher, unfortunately. There's a strike that's very likely to happen. I hope it doesn't happen, but let's talk about that. And we're going to talk about some more economic financial news. As always, we got a lot to get into today. Let's get started right here. JP Morgan warning auto strike will cut new vehicle production, driving used car prices higher. That'll also cause new car prices to go higher, unfortunately. And that's one of the things that we watch here on this channel for the cost of living is automobiles. Of course, we watch housing, the cost of food, energy, insurance, you name it. We talk about it here if it has to do with the cost of living and the economy. But this is not good news, folks. People are already squeezed with the prices at the pump, with everything else around us going up or staying higher and not coming down, which is just as bad. And folks, this is a pretty big deal, not just for car prices, but for the economy, right? When you have this many people going on strike, not working, that really has an impact on the economy overall. GM is offering a 10% wage hike um, in these talks here with the workers. Now, let's go back to the basics on this one. If it weren't for the enormously high cost of living, we wouldn't see so many strikes and we wouldn't see so much demand for higher wages, right? So this is another thing that goes along with inflation and the cost of living being too high for too long. And now you have more people striking, demanding higher wages to keep up with the cost of living. So, and around it goes, right? It's like a cat chasing the tail. It never ends. And then inflation goes higher, so there's always this demand for higher wages in this environment, right? But that's what the Fed wants. The mandate is 2% inflation. Of course, it's been a lot more than that. But just the fact that they have a mandate or a goal of inflation, is something, there's something very, very wrong with that. What if people don't have enough money? Why would we want inflation and rising prices when people don't have enough money to pay for things? Look at all the debt that people have to go into now just to keep up with the necessities. Now, NPR is reporting that automobile workers are asking for a 46% pay raise. That seems pretty outrageous. Has anyone here ever gotten a 46% pay raise? A few of you were asking me when I bought my car a couple months ago, why I would buy if I think prices are coming down. Well, prices have come down from the peak, but there's a lot of potential dangers out here, including what's happening over in Asia with the largest chip manufacturing country in the world, Taiwan. And now adding to the risk here, we have the strike. What if the deal isn't reached? Will car prices start going back higher? That would be a very, very bad thing. But weighing everything out, I chose to buy a vehicle, especially because I got a really good deal on this particular vehicle because I had a factory recall, which was very simple. It was just a hood latch. So the car was priced like $3,000 or $4,000 below all the comparable vehicles. So that's why I chose to buy. But I'm not telling anybody that you should go and buy now because these things are not certain. Maybe they'll reach a deal on this strike. Um, and honestly, I wouldn't have bought if it weren't for the extra good price because of that factory recall, which ended up being a simple fix, by the way. Now, a lot of people are really struggling right now, keeping up with the costs, keeping up with rent. And I want to go to one particular story out of Canada where the landlord raised rents on these people by an enormous amount. And it opens the discussion of rent control. Some people say we need rent control to stop the what they're calling landlord price gouging. Other people say if they own the home, they can do what they want. They can charge rent. They can charge $1 million rent if they want. Nobody's going to rent it from them probably, but they have the right to try to charge whatever they want. So, do you have the right to go into a store and tell the store how much they should charge for all of their products? You'd probably say no. I think everybody would say no. So then why would anyone have the right to tell a homeowner how much they can charge to rent out their home? You see what I'm saying here? Well, let's get into this story because this is pretty outrageous. So take a listen here to what these two people are saying what happened between the landlord and them.
Our landlord increased our rent by 7,000 per month.
Sisters, you
7,000 per month. I don't think the landlord wants to rent that out to them. I think the landlord is just trying to make them leave, an increase of 7,000 per month. Wow.
Sisters Yumna and Khadija Farouk have lived in a midtown Toronto building for the past 3 years. Their rent was $2,500 per month. The landlord raised the rent to $3,500 a month, and when they had concerns and wanted to change their lease, the landlord raised the rent again to $9,500 per month.
We know like our building is not rent controlled, so this was always something we were worried about, that if something were to happen, that this could be like an issue. And of course, we can't.
See, they're hinting at rent control. For one thing, if you don't like the rent, you just got to move out. Just move somewhere else where the rent's cheaper. I don't think you should force anyone to set limits on how much they want to charge for something, right? So if Walmart starts raising their prices, then more people are going to go to Target. If Target starts raising their prices, then more people are going to go to Walmart, vice versa, right? So when you have different sellers out there, different stores for um, competing for customers, that's how you keep prices low. Competition keeps prices low. Let's continue here.
We can't pay 9,500 per month. There's no way he can really be serious about giving us this notice. Like, we were just very shocked.
The rent increase guideline for this year and next year is 2.5%, but the guideline does not apply to buildings built after November 15th, 2018. Landlords with newer buildings can raise the rent by as much as they want.
Our landlord increased our rent by 7,000 per month.
Now, one of the people there talking said they didn't think the landlord was serious. Well, I think they're correct. I don't think the landlord's serious. I don't think the landlord wants to keep them as renters. Again, I think the landlord is trying to just make them leave. And who knows? Maybe there's more to the story. Maybe something else happened. Maybe they approached the landlord the wrong way. Maybe they talked the wrong way. Maybe the landlord just wants to have it cleared out so a relative can live there. Who knows? But they do have some sort of rent control. You heard them talk about how newer buildings don't have the ceiling on the rents like some older buildings do, right? And that's another problem. When you limit something in one area, the price in other areas is going to be more demand for that. So if you limit the price increases on older buildings but not newer buildings, more people are going to go to try to rent newer buildings. Then you have more demand. Then you have prices going up because of that, right? So it's a no-win situation. All right, this all goes back to the fake system of money, folks, causing the inflation. Ever since we came off the gold standard in 1971, massive, massive inflation. And when you just throw money at the problem, it's just going to get worse and worse and worse. And you may see periods of corrections, like we did see a pretty big correction back in 2008. But look where we're at right now. The bubble's even bigger, cost of living even higher. People are in more debt. We have more than double the credit card debt than we did back in the financial crisis as consumers. The national debt has exploded. What it's basically tripled. Yeah, so almost quadrupled basically since the financial crisis. So pretty amazing how people really can't connect the dots and really see what the real problem is here. It's the system of money. Well, let's talk about more about how this is affecting people. Now, this has been going around a little bit on social media here, and this is what people may be doing with their food if prices don't start coming down. Take a look here. Wow, that's a nice knife there. Is that a Ginsu knife? Those are some close cuts. So are these going to be the sandwiches that people are going to have to eat if things don't get under control here in this financial situation? And a lot of people are out there asking this question, not sure if everything is expensive or am I just poor? Well, when everything is expensive, you are poor. Next, I want us to take a look here at the outrageous disconnect between the cost of living and home prices. And we're going to talk about California, but there's many other areas in the US and around the world that are just as bad. But take a look at this here. This was posted here recently. And again, this is income compared to home prices here in California. Look at that, up to the 850,000 median home price. But look at wages. Let me fast forward to the end of that here. Median income 81,000, 850,000 median price. Now this is not exactly up to date, but it's still pretty close to the income and the median price currently. And it started off, it was 31,000 median income to a $186,000 median home price. Well, how is this possible, do you ask? How are home prices going up when people are not making enough money to pay for the homes? Well, it's because of lending. It's because of institutional and corporate investors scooping up a lot of homes. And it's just the fact that banks are able to loan out all this money and allowing people to bury themselves under all this debt. The more money you allow banks to loan out without actually having anything in reserves, the higher prices go. Right now, the reserve requirement is zero. So the risk of inflation is a lot higher than it is deflation, right? So buckle up, folks. We've got the possible auto strike, another inflationary force with auto prices. If that happens, with the stoppage of a lot of manufacturing in cars and trucks. So please let me know and comment what you think about that. Will they go on strike? And what do you think about inflation versus deflation? There's a bunch of channels out there predicting a falling, crashing prices, housing bubble crash. I don't think we're going to be so lucky, folks. Either way, it's going to be painful. Even if prices do crash, it's going to be a lot more job losses. People in the real estate industry are already hurting. A lot of people had to stop doing what they were doing in the housing market or in the housing industry slash real estate industry, like appraisers, loan officers, and they had to go get other jobs like fast food, Uber drivers, Lyft drivers, etc. So the economy's changing. Debt's exploding, folks. There's no way out of this. It may not seem like it because everything's kind of happening in slow motion. People were expecting a crash, like in 2008 with the crashing home prices. Not happening, folks, unless something crazy happens, like a war or something else, like maybe a cyber event. So that's my analysis today. What do you guys think about this? Please let me know down in the comments what's going to happen with car prices. And what do you think about that crazy disconnect between median wages and home prices? All right, folks, everybody keep stacking. Hope you like the support. Oh, what do you think about the increase in the rent, too, for those two people in Canada? I think the landlord just wants them gone. But should there be rent restrictions, or does that just make the problem worse? Again, like to hear from you down in the comments. Thanks, everybody. Keep stacking. Bye for now. Peace.